warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbarago. It's Tuesday, the 18th of November. We thank you for joining us at this time on the show.
All right, then let's tee off with your news now. South African telecommunications firm Telkom has reported a strong set of half-year results, with headline earnings per share jumping 16.4% to 305.6 cents for the 6 months ended September 30, 2025. Group revenue rose 3.4% to 22.1 billion rand, supported by a 10.3% increase in mobile data revenue and 12.3% growth in fiber-related data revenue. Overall, data revenue expanded 7.9% and accounted for 59.1% of total revenue. CEO Serame Taukobong said the company's data-led strategy continues to drive performance as Telkom positions itself as a key player in South Africa's digital future. In Kenya, Absa Bank has reported a strong set of Q3 2025 results, with profit after tax rising 14.7% to 16.9 billion Kenyan shillings. Total assets rose 14.4% to 554.3 billion shillings, while customer deposits increased 9.2% to 384.3 billion shillings. Loans and advances declined 0.6% to 309.7 billion shillings. Net interest income fell 4.6% to 33 billion shillings, but non-interest income rose 11.2% to 13.6 billion shillings. Loan loss provisions dropped 39.6% to 4.8 billion shillings, supporting the bank's strong earnings performance. In South Africa, the 18th plenary meeting of the Organization for Economic Cooperation and Development, or OECD, on tax administration opened in Cape Town earlier today. The forum centers on strengthening revenue collection, fostering economic growth, and enhancing tax certainty, while also acknowledging the transformation of tax administration driven by digitalization and the growing use of artificial intelligence. Here are excerpts.
I'll just point to a couple of the key things that we have done over the past year. First off, on Tax Administration 3.0 and the digital transformation. We've really been trying to take a very practical approach here and thinking about how we can not only discuss the ideas and the concepts, but take those into practice. And we've moved some projects from proof of concept to proof of implementation, just to ensure that they're technically and operationally viable and give us sound platforms going ahead. It's such an evolving and complex area that sometimes you can get lost in just the concepts and thoughts. But as tax administrators, I think it's also upon us to make sure that we can implement the ideas that we have. And I think the group's done some very good work identifying some things that we can focus on to make sure this is all implementable, if that's a word. We've hired some external contractors, and Nina will speak more about this later on in the session as we talk about that key digital transformation. I don't know about you, but when I'm back at home in my day job, that's a very big issue that people are interested in. How are we adapting to this world of technology change and taking advantage of it from a tax administration perspective? We have developed a pilot framework for the use and governance of artificial intelligence. Again, artificial intelligence is a very big tool out there that can be used. But I think we've been thoughtful about it, and I would say the same thing in Canada, of trying to make sure that we have the proper governance, that we don't just rush headlong into this area and start making a bunch of very critical mistakes. We've focused on the governance, tried to see how it could be helpful to us and how we can progress in a very thoughtful and prudent way, which I think will be beneficial in the long run. And I'm very pleased with the work we've done over the past year.
In Ethiopia, the Petroleum Supply Enterprise, or EPSE, will start collecting a 30% fuel tax next month, combining 15% VAT and 15% excise duty. The move follows ongoing subsidy cuts since 2022, with a targeted public transport subsidy remaining for low-income households. EPSA will remit taxes to the Ministry of Revenue with full cost recovery for petrol and diesel planned by December 2025 and net transfers capped at 30 billion birr. In Ghana, the nation today opens its International Currency Conference in Accra, marking 6 decades of the national currency. According to the Bank of Ghana, the conference will bring together global financial experts, central bank leaders, and policymakers to reflect on the journey of the city and explore how Ghana can strengthen monetary resilience amid a fast-evolving global economy. Let's listen.
So, ladies and gentlemen, the importance of this engagement is heightened by Ghana's notable progress over the past 10 months in achieving macroeconomic stability and restoring confidence in our economy and our currency. And so allow me to highlight some key developments. 1, macroeconomic stabilization through disciplined fiscal consolidation, increased domestic revenue mobilization, prudent expenditure rationalization, and better coordination between fiscal and monetary authorities. Through this, we have restored balance and reduced uncertainty. Inflation has continued to decline, and expectations are more firmly anchored today. The second is the strengthening of the cedi. Improved forex liquidity management, enhanced reserve buffers, and the regulatory reforms have contributed to significant exchange rate stability, which is critical for business planning, investment decisions, and public confidence. And the next is rising confidence indicators. Business sentiments, consumer surveys, and investment outlook reports all indicate a steady recovery of our economy. Our development partners, the financial markets, and the global rating agencies have acknowledged these reforms. And so these efforts have culminated in a significant sign of credibility. Ghana's sovereign rating by S&P was upgraded recently from CCC plus /C to B minus B with a stable outlook on 7th November 2025. And that is why I give credit to our finance ministry and our central bank, the Bank of Ghana. Ladies and gentlemen, this is an affirmation that our fundamentals are strengthening and that we're on a clear path of recovery.
The G20 Social Summit has officially opened today in South Africa. The 3-day event will serve as an inclusive platform, amplifying the voices of civil society, grassroots groups, and communities to tackle the global issues that matter the most. Here are excerpts.
Through Agenda 2063, the African Continental Free Trade Area, and the forthcoming decade of African reparation, we are charting a course towards self-determination. Distinguished participants, if this new world order is to be legitimized, it must be built with the active participation of civil society. Government alone cannot engineer the transformation. We seek the private sector. We know you cannot alone guarantee equity. International institutions alone cannot guarantee accountability. It is the civil society that provides the moral compass and the grassroots legitimacy essential for sustainable change. ECOSOC stands as the institutional bridge between the aspiration of the grassroots communities and the policy corridors of the African Union. In the context of this G20 Social Summit, civil society brings what formal institutions often lack: proximity to reality. When we discuss food security, we bring the perspective of smallholder farmers facing drought. When we debate digital transformation, we amplify the concerns of communities lacking basic connectivity. When we deliberate on social protection, we carry the stories of informal workers without safety net. Our participation is not a courtesy, it is a necessity. As we embark on these 3 days of deliberation, I call upon all stakeholders present to approach this summit with the seriousness it deserves. It is our earnest appeal to the G20 member states. We need to recognize that Africa's participation through South Africa is not a favor extended to us, but a necessity for your own legitimacy.
Finally, on News Now, Global Entrepreneurship Week has officially opened, marking the start of a worldwide celebration of innovation, startup culture, and economic empowerment. The week-long event brings together entrepreneurs, investors, policymakers, and young innovators to inspire new ideas, build networks, and drive a business growth.
While we engage with them, definitely there is a lot of passion from the entrepreneurs. They are very much passionate, very much energetic, but at the same time, there is a huge need from ecosystem builders to be an early risk takers, to lift them up. Here, I wanted to just mention one of the projects that we are running. I see MasterCard Foundation is also partnering here. In partnership with MasterCard Foundation, we have a project called EdTech Fellowship Project. And basically that is supporting young innovators who have innovative technological solutions to complement to the different challenges we see in country in the education sector. And definitely these young entrepreneurs, they have passion. They are really passionate. But at the same time, they also lack a lot of things that can really make them efficient and successful in running their business.
I am Melissa Enoch, and that's it on News Now. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets traded today, starting off with the equities. The African equities are negative today. The Nigerian Stock Exchange slipped 0.12%, as well as the BROVM 0.55% to 338.56. The Nairobi Securities Exchange was also down 0.09% to 187.69. In South Africa, the Johannesburg Stock Exchange fell 1.44%, and in North Africa, the EGX30 closed on the negative, down 1.37%. Let's do a quick run on some of the Pan-African currencies. The Rand traded at 17.23, down 0.47%, while the Egyptian Pound gained 0.27% to 47.17. The CFA franc eased 0.16% to 566.08. The Kenyan shilling firmed 0.15% to 129.71, and the Moroccan dirham fell 0.07%. The naira strengthened 0.37%. Let's switch into the commodities data deck, beginning with energy prices. Brent crude gained 0.02% to $64.21, while US WTI was up 0.08% to $59.96. Natural gas saw a sharp decline, falling 1.54% to $4.29, while Arabian gasoline dipped 0.39% to $1.98 as at 13:06 GMT. Now, finally, two soft prices. Cocoa fell by 0.22% to $5,424, while coffee gained 0.97%. Cotton was also up at $64.16, up 0.16%. Palm oil eased 0.20%, while sugar climbed 0.07% to $14.81 as at 13:09 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Thank you for those market updates, Grace. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.